From IBA, let's get across to Sunil Duggal, CEO of Dabur.
Volumes are concerned, we did close to a double-digit growth, 9.5 to be precise. And I think that's pretty heartening under the circumstances that we are, over the last many quarters, able to maintain strong volume growth trajectory. There has been an element of inflation, so price increases have contributed to around 5%. Overall domestic business growth is 14.3, which is in line with what we did in the first couple of quarters, and again driven by volumes.
Alright, your key growth drivers apart from just volume, and of course your outlook on how volume you think is going to pan out in the next couple of quarters?
Hard to say. I think there's been a little bit of slowdown in some of the more discretionary items, so there could be a little bit of pressure on volumes, but I'm convinced that we should be able to grow volumes in the trajectory of 8 to 12%. This is what I had forecast 6 months ago, and we are on that path. I think we'll be able to maintain it.
When you talk about category or segment-wise performance for Dabur India, what actually has driven your numbers this time around?
Food has been important here, growth of around 22%, which it has been doing over the last few quarters, so it continues to be on a high growth trajectory. But I think the key driver has been our home and personal care, which was a little bit behind the curve in the earlier quarters, but has caught up and showing strong 15 plus growth, again largely volume driven. Within home and personal care, the home care part, as always, has delivered strong growth, but we've also seen extremely aggressive growth coming from our shampoos portfolio, from perfumed hair oils, Amla hair oil in particular, from the toothpaste categories, particularly the premium toothpastes. So many of these categories which had showed a little bit subpar growth earlier have now caught up and are in fact leading our growth.
Alright, one question here on how your international sales really has panned out as compared to your domestic growth.
We put them to three buckets. There is the organic piece, which is hubbed in the Middle East and the MENA region, which has done extremely well, around close to 20%, 17-18% growth in sales, but very high expansion margins on the back of soft commodity prices. The Turkey business has turned around and now generating strong growth. We still have to extract a little bit more profit from that business, but then we are investing big time in advertising, so we don't mind that. I think the US business is the only one under pressure. That has been under some pressure for the last couple of quarters on account of reorganization of the brand architecture, as well as very high investments in terms of distribution and other activities. So that will take a little bit of time, maybe a quarter or two, to get back on rails. But other than the US business, everything else is done extremely well.
What is your forecast when it comes to demand here in the domestic market? What do you see rural demand panning out? How do you see that? Has there been significant growth in that, or is that a bit stressed?
I think rural demand is not there for the taking. You have to go out and capture it. There is inherently good rural demand, but till you build the last mile reach and the infrastructure, you will not capitalize on it. Now, we've invested big time last year in building rural infrastructure, as we all know, and I think that's paying off, because if you take a 14.5% rural growth, domestic growth as a whole, the rural growth has been close to 20%. So growth in the domestic has been A, driven by the rural markets, B, driven by modern trade. The biggest drag in the domestic consumption has been actually the canteen stores, the army offtake, which for the third quarter in a row has been significantly negative.
Alright, when we talk about advertising spend for Dabur India, has that been more expensive this time around, and what kind of impact really has it had on your numbers?
Well, we continue to step on the gas as far as A&P is concerned. I think this quarter we spent close to 15%, 14.6 to be precise, as a ratio, and well ahead of what we spent last year. So we continue to expend considerable amount on our brands, and despite that we've been able to expand margins.
Alright, a quick comment here, reaction really on how inflation has plagued, if at all, Dabur India's performance, and what is your concerns on that front in the next couple of months?
Well, inflation hasn't been good to us in the current year, certainly not as good as what we thought, on the back of high commodity prices, which have been a little bit impacting some of our products like, say, honey, for example. And also the rupee dollar impact, which has significantly eroded margins in our foods business. We hope that will be temporary. We should be able to regain the earlier margin profiles, but inflation has hit us in some areas at least pretty hard.
Alright, and before I let you go, Mr. Duggal, new product launches, anything,
Okay, that's of course Dabur on their earnings. Just before that, we had the IBA which spoke about how there could be a cut in the lending rates, not necessarily in the deposit rates, but do not expect significant fall in the net interest margins as well. Private banks are doing well for themselves in today's session, so Axis remains the top of the charts, coupled with an ICICI Bank, despite the Bank Nifty having come off. But coupled